In this video, we're going to catch up with the latest moves in the US stock market and a look ahead to earnings that are due out from AMZN.com on Thursday night. Hello, I'm David Jones from Capital.com, and this is our weekly video where we take a look at the state of stock markets. It's big time for US stock markets at the moment. We are well into earnings season where the various US companies reveal how well or how badly the previous quarter went. So far this week, the major ones we've had: Google, Alphabet on Monday night, beat expectations, share price rose in after hours. Later on this week on Thursday, we've got AMZN.com's earnings coming out. We'll talk about those in a second, but first of all, let's just take a look at the broader market, the S&P 500. It's breaking, I think, what has been a pretty major level. So let's catch up with what we should be looking at this market in the days ahead. So here's our S&P 500 chart, so the broader US stock market. And I think this daily chart, this is the important one at the moment. We had that massive burst of volatility late Jan, early February this year. We've seen the market sort of chop around, maybe a bit of shock, I think, after the size of the sell-off that we'd seen. But over the last week, we are seeing it push back through these old highs left in March of this year. So pushing through 2,800, hitting its best levels since, early Feb. So we're at 5-month plus highs. This 2,800, it's a big break. You know, we've seen it a few times in the past, really struggle to get through here. So it is a suggestion that perhaps we're seeing sentiment changing and becoming more bullish. If we're going to see this break continue, the obvious target is for a run back up to those all-time highs. So just around the 2880 level on the S&P. It's pretty overextended in the short term because we have seen quite a big run. We've seen 100 points, more than 100 points put on by the S&P in under a month now. Maybe a little bit. It's getting near overbought on the RSI, but at the moment, any weakness still looks to be, I think, a buying opportunity. We've got this recovery going on from the April lows, so we're nearly 4 months into that big support at 2,700, 2,680, this sort of level. So even if we saw a sizable sell-off, it doesn't quite yet change that bigger picture view. Let's take a look at the short term. So here's our shorter term chart, the hourly chart. You can see for the second half of July, it's sort of trying to have a sustained break through 2,800, moves above it. 17th of July sells off, but doesn't take out these old lows. So we've got really good short-term support for now, 27.90 through to around about 27.95. The market's trading at 28.20 at the moment. So in the short term, if we're looking to see is there an opportunity to buy a shorter-term pullback, this would be the sort of area that I would be watching. If we did see maybe some disappointing earnings from some of these US companies putting a bit of pressure on the market, let's see how 27.90 to 27.95 reacts. But for now, on the dailies, the fact is broken above 2,800 decisively so far. Looks to be positive. So that move above 2,800 looks to be significant. You know, since the big sell-off in early February, we haven't really managed to crack this level until the last week or so, and so far it's holding above it. If we see further gains, then as I was saying, that the logical target is to look at a run back and maybe to break those all-time highs. So it's an interesting one definitely to keep an eye on, I think, throughout the summer. Let's talk about Amazon briefly. Massive online retailer, as we all know, due to report earnings after the market closes on Thursday evening. So after 9 o'clock UK time, we'll be hearing from AMZN.com. The expectations are that we'll have earnings of around about $2.50 a share. It's expected to do well across all of its businesses, the cloud services businesses, the traditional retailing, online retailing. The share price goes from strength to strength at the moment. So let's take a look at some of the levels to watch. So here's the price chart for Amazon. Even this year, so just in the 7 months of this year, we've seen the price go from around about 1,200 up above 1,800. So the price is up by more than 50% year to date. Let's just pick up on this latest trend from those October 2017 lows. So here's the latest bit of the move. And it's only in the last week that we've seen yet again fresh all-time highs for the Amazon share price, trading up above $1,850 a share on the 18th of July. Of course, it's going to be a bit overheated up here after the sort of run that we've seen since April. A bit like back here maybe, where we saw the market push higher, but very overbought on the RSI. So again, overbought again up at these levels. So there's definitely space for a sell-off. But as we've seen over the years with Amazon, any sell-off has ended up being just another buying opportunity. So let's see how it reacts on Thursday when those earnings come out. Big levels to watch: 1650 if we do see a sell-off, the 1650 lows from end of June, 1550 after that. You know, so many support levels, 1350. So I think it would take a pretty major disappointment and a major sell-off to break this trend at the moment. It really has been an incredible performance for that share price. It's all going to change on Thursday. We'll have to wait and see. But you know, so far over the years, Amazon has not disappointed. So let's see what Thursday brings. We'll start wrapping things up there. But as usual, any questions or comments, leave us a message in the comments down below. If you like the video, click on the thumbs up. And to never miss out on the videos that we upload. And also every Wednesday, we do a live broadcast from the YouTube channel where we take a look at the various different markets: FX, cryptocurrencies, indices, gold, oil, all this sort of stuff. So to make sure you get notified, click on the subscribe button. And if you click on that alarm bell icon, you get automatically notified every time we upload a new video. But for this week, from our look at stock market indices, we'll leave it there. So from me, David Jones, and Capital.com, I hope you have a good trading week.